Welcome to the Lend Academy podcast, episode number 212. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's show is sponsored by Lend It Fintech Europe 2019, Europe's largest fintech event for lending and digital banking. It's taking place on the 26th and 27th of September in London at the Business Design Centre. Lending and banking are converging. Lend It Fintech Europe delves deeply into this new world, bringing you the latest developments in the most important areas of fintech. Lend It Fintech, lending and banking connected. You can find out more and register at lendit.com/Europe. Today on the show, I'm delighted to welcome Arad Levertov. He is the CEO and co-founder of Sunbit. Now, Sunbit are a very interesting company. They've been flying under the radar somewhat, but I think you're going to hear about them more and more because they have a really unique and interesting approach. You know, they are a lender. They actually work, though, in the offline world as opposed to the online world. They work at the point of sale. They have a number of different verticals, specifically the car repair vertical is a big one for them. And they're able to approve a very large percentage of applicants while at the same time keeping interest rates low and actually defaults low as well. So how they do that, we actually get into in some depth. We talk about their underwriting, what their approach is there, how they're able to do it, how they're able to make a very quick and painless process for the consumer when they are applying for this loan. And that's sort of a bit of a secret sauce they share there. Talk about who this typical consumer is, how they find these customers and the different verticals they're operating in and what they've got planned for the future. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Arad.
Thank you, Peter. Happy to be here. Okay,
so I'd like to get these things started by giving the listeners a little background about yourself. You've had an interesting career, not very typical of a fintech executive, I would say, including stints in the military. So why don't you give us a little bit of background about what you've done in your career to date?
Oh, sure, of course. So actually, you're right. I started my career at the military, at the Special Forces, where I spent 5 years. Then I worked at Intel Electronics as a manufacturing manager. And then after moving to the US, I actually got into the fintech world when I joined a company that was providing online lending based out of Chicago, first as an intern, but then became the chief operating officer of a company that probably was the pioneer in online lending, provided customers loans in the US, UK, Australia, Brazil, and China. And this is where I really learned everything about fintech, about lending, about the regulation, about marketing, and gained all this experience, which led me about 3.5 years ago to leave and to start Sunbit.
Okay. Well, so and that company obviously that's Innova we were talking about there, right?
Correct. Yes, that's Innova International. We started small and we went public. This is right now a public company that provides hundreds of thousands loans to customers.
Okay. So then, what was the catalyst? What was the idea? You know, you're working at Innova. Obviously, you got to know the online lending space and how it all worked. But what was the idea that led to the founding of Sunbit?
That's a great question. So, as you mentioned, I worked at Innova. I knew all the details about online lending. Also, you can hear that I'm an immigrant, and as an immigrant, you don't really have credit when you come to the US. You actually start as a subprime customer. And actually, when I started working at Innova, I was making salary. I said, this is the time to get a credit card. So I went to Costco with my kids. I said, maybe I'll get a credit card right now because I can pay for it. Applied for the credit card, at the cashier, when the cashier asked me, how much do I make? Where do I live? My social security number, and then got declined. And it was pretty embarrassing to get declined in front of other people, in front of my kids in that case, at the point of sale. And then I realized that it's not only me who got declined. Actually, about 50% of the people who apply for point of sale financing are getting declined. And the people who do get financing, who do have credit cards, sometimes pay high rates for the credit card.
Mm-hmm.
So I thought there should be a better way to provide financing for everybody to improve the operational inefficiency by the cost of the marketing, the cost of the fraud, and give the savings back to the people. So I thought to develop a product that will be able to allow all customers to finance what they need in a fair and good rate. That's how I thought about Sunbit.
Okay, so then, I think it's interesting because you came from the online world, and when I sort of was doing some digging about your company, it's like you really decided, it seems like, to focus on the physical point of sale, like what you just experienced, you said, at Costco. So what was the reason, even though you've got this online lending background, and you decide to focus on the physical point of sale?
That's a great question. And, many people are focusing on the online world. Everybody is moving online. Again, Innova was one of the pioneers in online lending. But at the end of the day, 90% of the purchases are still happening with the brick and mortar.
Mm-hmm.
People need to fix their car. People go to the doctor. People go to buy glasses. People go to the veterinarian, and people go to buy in the mall. And when you look at the innovation, you saw that there was some good innovation in online. Companies that do online lending, companies that do online lending in the e-commerce point of sale. But when you actually look at the brick and mortar, the main player there are still the credit cards. And when you want to fix your car and it costs you $500 or $600, you don't really want to apply for another credit card. You don't have the time to fill up an application, and at the end of these 10 minutes to get declined if you're one of the two who didn't get approved. So we saw that there is opportunity to bring machine learning and innovation and to build a unique product to the brick and mortar, which will serve 80 to 90% of the purchases, which any of them will stay in the brick and mortar. People will still going to fix the car. People will still going to go to the doctor, and they have to do it in face-to-face.
Right. Okay, so maybe, you just mentioned a couple of different verticals there, but can you just share the main verticals that you're focused on today? What industries is Sunbit available on?
Sure. So Sunbit product, and we'll dive into it later, it allows us to basically approve customer within 30 seconds, approve 9 out of 10 customers while maintain credit rates. And when you think about it, it can work in any vertical. It can work in people that buy things in the mall, people that fix the car, people that buy furniture and everything. We like to focus on verticals that are, we call it non-discretionary verticals, that we help people to get the things done and continue the life. People need to fix the car. This is one of the biggest verticals that we have, is the car repair in the dealership market. With the authorized dealership, with Toyota and Honda and Kia, there are a lot of people who come and fix the cars. They need to fix the car, and they need to go back to work. We love this vertical. We also have verticals in healthcare, in dental, in eye care, in veterinarian. People need to do it and go back to their life. Usually, sometimes this is a surprise. They didn't know they need to fix the car. They didn't know the glasses got broken. They need to get glasses because they need to continue the life, and we are there to help them.
Mm-hmm. Okay, so obviously in many of these verticals there are other companies. I'm just curious how's the process work where we can take the auto vertical. There are other companies offering different auto financing for not just for cars but for car repair and that sort of thing. So how does it work? How do you get into these established companies?
So there are many companies that maybe offer financing for buying car, and some companies do offer financing for car repair. But when you think about car repair, when you think about fixing your car at the dealership, when you go to fix your car, as a customer, you really don't have a lot of time. You want to put your car, you want to go to work, and you want to pick it up at the end of the day. You don't have the time to go and fix up the car or fill up an application and spend time. So we came with a value proposition that tells the merchants that with Sunbit, customer can get approved within 30 seconds. And not only that, we are able to approve almost every customer while maintaining credit card rates and while providing each customer with a better offer compared to its alternative. So our offer, which is fast from one hand, high approval from the other hand, and also maintain good rates, basically gives us the ability to get into places where the other lenders or the credit card companies couldn't penetrate because it didn't fit to the process.
Mm-hmm. Okay. So let's dig in there for a little bit. It sounds great to be offering, lower rates, higher approvals, quick response time. But, how are you able to do that? What's your underwriting like? Tell us a little bit about that whole process.
That's a great question because, when I started the company, I said, let's make sure the loans are coming back before we scale.
Exactly.
You don't want to be the business that you don't want to be the business that you give loan, but then it doesn't come back. So that's a great point. And we, right now after 3.5 years, we have many loans that came back because our average loan is around 10 months. So that's where the time to start scaling, and we did it about a year ago. So how does it work? The exciting thing about what we do and is how do we deploy machine learning and artificial intelligence into the process, but not only into the underwriting process. Because we are in the brick and mortar, we know what's going on before even the customer applies. So a customer that goes and fixes his car in the authorized dealership, this is a different customer that will go to fix his car in the store around the corner. Mm-hmm. This is a different customer who will go and use financing to buy jewelry or to get dental treatment. So we take it all into account, and that's even before the customer went to apply for the loan. The second thing that is unique for us is because the process is so fast, basically we scan the customer scan his driver license, fill out an email and a phone number, and with a click of a button gets approved. Again, scan the driver license, phone, an email, and click on a button gets approved. It feels like a payment method versus a financing. Mm. So we get actually more customers to apply than a customer that is really desperate to get financing. And this is all before we get into the underwriting, but it all takes into account with our artificial intelligence and behavioral economics. And then when you go to the financing, when you go to the underwriting, we underwrite the customer to the specific transaction in the specific location. So most of our loans are in the hundreds of the dollars. The average loan maybe $600, $500.
Okay.
This is really different than when you need to apply for an online loan of $10,000 or $15,000. If you think about it, let's say that our average loan is, let's say, $600 on 3, 6, or 12 months. Let's say that the average is 10 months, which means that the average monthly payment may be $60 or $70. When you think about the customer, whether it's a side-prime customer, a near-prime, or a prime customer, I can tell you that many customers can figure it out to find a $70 a month. So it's not that we need to analyze and if the customer has the ability to pay, because everybody has the ability to find $56 for a month. What we are focusing is in the behavioral economics of the customer is the customer willingness to pay. How do we treat the customer well so the customer treats well, gives us back the money that he owns us? We take it all into account with the sophisticated artificial intelligence, and that's why we're able to really approve almost all customers, 9 out of 10 customers, and provide all of them below credit card rates, which are far from the pay the loan or predatory rates.
Okay. So a couple of things there before we move on. I just want to go back, and you said that you do, a driver's license, and you said there was 3 things. There's no form to fill out necessarily, but there's 3. You only need 3 pieces of information, and I just want to clarify that that's it. Like they're not filling out a form. And so just go back and tell us these 3. I remember the driver's license, a scan of the driver's license, and what were the other 2 things?
Sure. So the customer, we provide the retailer a tablet, and with this tablet, the retailer, the associate in the store, would ask the customer to scan his driver license.
Right.
From this information, we take the driver license. In addition, the customer needs to enter the email, which is the second thing. They need to have access to an email, of course, so we can communicate on the email.
Yep.
And the third thing is to have a debit card in hand. And so with this debit card, we basically register the customer to a monthly recurring payment, and we take a small down payment from each customer. So with these three things, the debit card, the driver license, and access to an email, we get approved, that we are able to approve the customer. As I mentioned, we do it in seconds. There is no form, there is no questions, nothing to fill out. Scan the driver license, email, and phone number, get approved, and then add the debit card before we sign the contract.
Okay. So obviously there's a lot of information you can get from just those data points, and I'm curious about like the 90% number. So is it because obviously there's no way in the world an online operation could duplicate this, and I think the thing I think is interesting is it's because this is offline and because this is face to face. And if you've taken your car to the car dealership, you obviously are not, you have an asset for a start. You have a car, and so I'm guessing that because this is face to face, that takes away a lot, I imagine, of the fraud piece where someone's trying to scam you. They're not trying to get a loan to go and blow money in Vegas. They're trying to get a loan to actually do something. Is that so? I just want to dig more into the 90% you can do. It's because this is not deep subprime. This is more mid prime. Or is that right?
So I think you nailed it. Our mission as a company, we call it to eliminate the waste and giving back to the consumer. Mm-hmm. And when we say eliminate the waste, we mean just if you will able to get a customer without fraud, so you don't penalize your other customers that they didn't that they need to pay for the guy who did the fraud. Same for marketing. And the fact that we're in the brick and mortar, the fact that we know that the customer came to fix the car. As you mentioned, they have a car. And by the way, when they came to fix the car, they knew they're going to pay something, right? That's why they came to fix the car. So they have something in the pocket that they are willing to pay. On the top of it, with the driver license and the debit card, we have a lot of information that we can compare and to make sure that this is the right person and this is the right reason they use it. And as you mentioned, we do not transfer the money to the consumer. We actually transfer the money to the merchant. Mm-hmm. So this allows us to really reduce a lot of the fraud, a lot of the waste. In addition, we don't go direct to the consumer. We basically go to the merchant, but the merchant actually produces consumers by helping them. The merchant is able to sell more by closing more transactions, and we get more consumers, and we pass these savings back to the consumer, give them a better rate compared to its alternative.
Right.
So with these savings, you're able to really approve all customers, and we do go to some subprime. We go out down to 500 credit score, empty in file. We approve all of these, and we do not go above the credit rate.
Okay. So then let's who are these people? I mean, you say you get under 520. I mean, you talked about yourself being an immigrant. I'm an immigrant as well. I had similar problems when I moved to this country, many years ago. So just give us a little bit of more information about these customers that are applying for loans. So
first of all, I would say that when you work with the brick and mortar, you need to be able to serve all customers. Mm-hmm. And that's what we do. We serve all customers across the credit spectrum. Because when a customer goes to fix the car in the dealership, it's not like they have a sign, I'm a subprime, I'm a near-prime, or I'm a prime customer. Right? And we work with our partners, which is the merchants, to help them increase the sales by providing financing to all customers. Mm-hmm. So we do have actually customers across the credit spectrum. We do have customers that are prime and super prime. And even though they do have in the pocket, I'm sure they have like a great credit card with a high credit limit, because of the ease of application, because of standard driver license, email, and phone number, they will try it. And then when we see that they are there, we'll give them an offer which is much better than the credit card. So we do have customers across the credit spectrum. When you look at the and the entire portfolio, of course, we have more customers that are, call it near and subprime, just because this is the loan amount of $500 to $600. But when you look at the entire book, our book average book is in the near prime, which means we do have customers in the prime and super prime.
Okay. So then what are the terms then? You said, you mentioned 10 months, $600, whatever. What about, what are the interest rates, and are you charging like an origination fee? What are the terms of these loans?
Sure. So first of all, we like to be transparent with the consumer. There is no origination fee. There is no extra fee other than the straight interest of the installment loan that we provide the customer. And it's all clear in the process, and then every customer receives it right away. For each customer, we give a personal loan. Our usually loans the APR go from 9% up to 36%, and each customer gets a different rate, a different approval amount, and as I mentioned before, a different down payment to put on the debit card. So if you're a prime customer, you probably get maybe 9 or 10 or sometimes in the teens, which is better than your credit card rate. If you're a subprime customer, you might get 29 or up to 35.99, but it's much better than your other option to go to a payday loan and take hundreds of the APR for this loan.
Okay, and then so what can you tell us about the performance of these loans? Because if you're there might be people that are willing to pay, but something happens and and they lose their job or whatever. We know that these things happen, and I'm curious about I know you haven't been lending a long time, but these are fairly short durations. So tell us a little bit about the loan performance, if you would.
Sure, of course. So we've been lending for almost 3.5 years. So we do have a lot of loans that came back, and we do have a happy portfolio. So we see performance that are on par with the prime books of the online lenders. Our loss rate is on par 43 from Lending Club or Phosphor, which is in the public market. While we underwrite people are really across the credit spectrum, and the reason is that one, as we mentioned, we use the sophisticated artificial intelligence to underwrite the customer to the right amount, to the right duration, to the right transaction specifically. And also, we underwrite for 3, 6, or 12 months, which is much different than underwriting a customer for 3 or 5 years. So all together, with the process that is fast, transparent, a small dollar amount, allows us to really basically serve customers across the credit spectrum and basically have loss rate of a prime book, which give us a really healthy IRR for the business.
I'm sure. So because it's interesting, because you're working with brick and mortar, you're really you have to you're serving your customer's customer in a way. How are you getting? I imagine this is somewhat labor intensive. You've got to go out to these these brick and mortar places to get them to offer your products. And then really it's up to you to so they just want you to approve everyone because they want to do the business. But how are you getting into the different the different retailers that you're working with?
So you mentioned that they want to approve everyone, which I agree. The brick and mortar, I think it's in order to be successful in the brick and mortar, you need to have high approval rate and you need to have overall low APR. You don't want to be in the predatory world, which is what I think is unique about Sunbit, because we are able to approve everybody while maintaining credit card rates. And as you mentioned, it does require us to actually have boots on ground and be in the brick and mortar location. It's not only a JavaScript that you send them and make it happen. You need to go there, you need to train them, you need to serve them, and you need to work with our partners, which is the brick and mortar stores, to basically help them help their customer, which will become our customers. We developed a tool. We developed a team here that basically is able to grow the business. We are right now operating in more than 40 states in the country. So we actually have locations that use and offer Sunbit in 40 states. And we developed the tool to work with them, to train them, to communicate with them, to communicate not only with the manager, but also with the associate in the store in a nice way, in an electronic way. Also using machine learning and artificial intelligence to encourage people to offer, to give a good word if they did offer, if they did close the transactions, and to work with them hand with hand to basically help them sell and get more customers for them and for us.
Mm-hmm, mm-hmm. And then are you working with an originating bank to actually issue these loans?
Yes, we do have a user charter bank that is working with us and help us to originate the loans.
Right. Okay. And then what about I wanted to switch gears to the capital providing to these loans. I know that you have Eric Thaler, who many listeners would know from his time at Prosper. He's your chief capital officer there. But maybe can you just tell us where the capital for these loans is coming from?
Of course, sure. So we are fortunate to have Eric who joined us after his experience with Prosper Marketplace. And we started, and right now we have a debt facility that we use to fund the loan. And our strategy says, first, prove that you can underwrite a loan, that the loan will perform. And what do we mean? Like have a skin in the game, show that you can perform the loans. And now we use this debt facility. And in the future, we are going to diversify our funding sources with maybe more debt facility, selling some loan like forward flow, and other options.
Mm-hmm. Okay. So then I read recently that you raised, I think it was $26 million in a Series B. Tell us a little bit about that process. Who was backing you and what it was like, going out and raising that money.
So we just raised another $26 million. The round was led by Zev Ventures and Oren Zev, which is our general partner. He invested in the past. He's really known in the Silicon Valley, invested in companies like Audible, Chag, and his latest investment is Trip Action, which is a really successful company. In addition to him, we were fortunate to have investors from really day one who loved the story and were with us from really the seed level or to the round A, which is a different investor, mostly Group 11, which is based out of Los Angeles and focus on fintech, and Chicago Venture, which is based out of Chicago and basically has deep understanding in fintech and retail. They were with us alongside from day one, and now with the investment of their venture, we're excited to have strong investors that support us for this mission.
Sure. So we're almost out of time, but before I let you go, I'm curious about what your mission is here and what the future holds for you guys. Maybe you could give us some sense of what you're working on in the short term and where you want to be in the long term.
Oh, so as I mentioned, our vision is really to what we call eliminate financial waste and give back to the people. Eliminate the operation inefficiency and give back to the people, whether it's for consumer by giving them better offers, or for merchants and partners to give them more tools. We started here about 3.5 years ago, small, gain everything, and now when we're scaling, with this capital in the short term, we want to scale. We want first to scale the car repair vertical, which is our leading vertical, and we are scaling really nice on this one. We are also looking for other verticals, which we are looking and scaling, and this is what we're going to do in the next 12 months. And then in the future, we're going to add more products, both for the consumer and for the merchants, to basically focus on leveraging technology to eliminate the waste, increase operation efficiency, and basically give the savings back to the consumers.
Okay, well, that is a laudable mission, and I wish you all the best. Thank you very much for coming on the show today, Arad.
Thank you very much, Peter. It was great being here.
Okay, see ya. One of the keys, I think, to be successful at the point of sale is you've got to make it as frictionless as possible for the customer. They don't want to fill out a long form, particularly if it's something that's under $1,000. They just want to get the loan and get out of there. And the fact that Sunbit's really focused on that, and they've got this just, as I said, 3 pieces of information that they're gathering. And it points to the, how we're able to get, all the different data sources that are available today for lenders like Sunbit really makes it possible that they can take just the small numbers of data points and be able to make an accurate credit decision that I think is, would not have been possible a few years ago. And certainly Sunbit are taking advantage of the situation today. And, the fact that they can do that and maintain a low default rate, that's going to be the big thing, I think, as they scale, to really be able to maintain that default rate. That really is, it's pretty impressive what they've been able to do. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's show was sponsored by Lendit Fintech Europe 2019, Europe's largest fintech event for lending and digital banking. It's taking place on the 26th and 27th of September in London at the Business Design Centre. Lending and banking are converging. Lendit Fintech Europe delves deeply into this new world, bringing you the latest developments in the most important areas of fintech. Lendit Fintech, lending and banking connected. You can find out more and register at lendit.com/Europe.